The advanced child tax credit is just about to start next month on July 15th. You're probably already getting letters in the mail if the IRS already has your information. But the big question that might be on your mind is whether or not you should opt out of the child tax credit because you're afraid that you might have to pay it back. Now, the answer is a little bit more complicated. Unfortunately, it's not straightforward. But fortunately, I'm going to walk you through in this video exactly what you should take a look at so you can make the decision of whether or not you should opt out of the child tax credit. But before we get into it, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, certified financial planner, helping you reach your financial goals. All right, so let's start with a quick recap of the child tax credit, or this change to the child tax credit. It was originally $2,000. In fact, it really still is. It's still $2,000, still at the $200,000 adjusted gross income for everybody else except for married filing jointly, which is at $400,000. Now there's an additional component, additional part, which is really this advanced portion to it. That's either $1,000 or the additional $1,600. That is where they get the either $3,000 or the $3,600 number, depending on the age of your child. I wanted to take a second to thank our sponsor of this video and several other of our videos, The Coldest Water. This is one of their bottles, the Coldest Water bottle. I'll leave a link in the description at the bottom. Go ahead and buy yourself a bottle, support the channel, and thank you to The Coldest Water. Then the second part that you want to take a look at is your adjusted gross income. So this is where you're looking at the numbers that were the same as the stimulus checks, where it's $75,000 for singles, $112,500 for head of household, and then $150,000 adjusted gross income for married filing jointly. That's where the phase outs begin. Now that is only for the additional sum above the $2,000. So $2,000 up to $3,000, that would be the additional $1,000. That's what phases out. Now, I have done other videos on the child tax credit, the phase outs, how much you can possibly qualify for. So go ahead and watch those videos. But I really want to focus in on what you should be looking at to figure out whether or not you should opt out. So the first thing is, how much do you qualify for? Whether it's $3,000 or $3,600 or a lesser amount. The second part is to look at your adjusted gross income, which is also going to affect that number. So the adjusted gross income could also decrease whether it's $3,000 or $3,600. But here's where a lot of people are getting confused on whether or not they have to pay it back. Now, this is going to go to your tax liability and what you're going to earn in 2021. So this is an advanced child tax credit, meaning they're giving this money in advance to you. So that is the part that's freaking a lot of people out because they think that if they get it in advance, they don't qualify necessarily, then they're going to have to pay it back. That's part true, but part not entirely true. And here's why. It all depends on your tax liability at the end of the year and your withholdings throughout the course of the year. So just like in any other year, at the end of the year, when you do your taxes, one of three things are going to occur. Either you're going to have to pay more in taxes, absolutely nothing will happen, meaning you don't owe any taxes, or you're not going to get a refund, or you're going to get a refund. So those are the three things: a refund, absolutely nothing, or you're going to have to pay. This is the same thing. So let's say that you qualified for the child tax credit of $3,000. So you're getting your payments of $250 starting on July 15th. You got all those payments. And let's say you're married filing jointly and your household income had an adjusted gross income of $140,000. So clearly you're below the threshold and you do qualify for the full amount of the child tax credit. Let's assume everything else is also true, that your dependent is actually your dependent and all that other fun stuff. But $3,000 is what you qualify for. Now, let's say that everything was identical to last year of 2019, really nothing changed significantly, then there's a good chance that nothing would change. Everything would be exactly the same. You wouldn't have to pay anything, and you're probably going to get a similar refund to previous years, assuming not a whole lot has changed. But here's the kicker. Let's say all of a sudden that you really didn't withhold enough this year for whatever reason. Maybe you changed a job and you filled out your IRS form W-4. Really important to look at your W-4 in this. Your W-4, let's say incorrectly, and you didn't withhold enough money throughout the course of the year. You might actually owe taxes at the end of the year. But in your mind, you might be thinking, well, I'm now having to pay taxes because I got the advance. Not entirely true, not necessarily true, but that is where everyone's getting tripped up. So if someone says, hey, I earn $150,000, it looks like I qualify for the full amount of the $3,000, so should I or should I not take the child tax credit in advance on a monthly basis? So that's where it gets a little confusing, because you want to go back and look at your W-4s to make sure that they're as accurate as possible. Now, if you don't already know, my channel has a ridiculous amount of IRS Form W-4 videos that you can go through and make sure that it is as accurate as possible. This is actually something that you can check pretty easily on the IRS website. Go ahead and check out my channel and you can go through your W-4. And this is really where you should start. So you should make sure that your W-4 is as accurate as possible. Now, this is where you're comparing your actual withholdings to your actual tax liability. So you want to make sure that those two are matched up, because if you're not withholding enough money, then at the end of the year, you might actually have to pay. And so much has changed in the last 12 to 18 months for so many different people that there's a good chance that if something changed in your life, that you're going to want to go back to look at your W-4, and especially with the changes in this child tax credit. Now, the same thing I say with the IRS Form W-4, make sure it's accurate. There's no reason why you should be getting a huge refund at the end of the year if you don't have to. If you have a similar income throughout the course of the year, a steady income, you're not a salesperson or a small business owner that might have volatile income, which is going to make it a little bit more difficult to figure these numbers out, then you can make sure it's as accurate as possible. Put as much money back in your pocket now rather than waiting for that refund. Because remember, a refund is really just a free loan to the government, and they're just giving your money back. They're not giving you money. They're giving you your money back. Now, the child tax credit now is 100% refundable. So I guess technically in that instance, it's not your money. It is an actual refund for money that you weren't taxed on previously, but the concept is exactly the same. It doesn't matter. If it's money that you're going to get at the end of the year, you might as well get it right now. But the key here is to make sure that your withholdings are as accurate as possible. Now, here's a bonus tip. Because this child tax credit has increased and you're probably getting more money back in your pocket than you did in previous years, bump up your savings. Whether or not, if you're already saving, save more. And if you're not saving, now is a great time to start to save. And you can even reduce your tax liability further if you put it into a pre-tax account. So there is a lot of wins here that you can capitalize on and improve your overall financial situation. And if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.